If you're on the hunt for strategies to amass wealth, you're likely to encounter a compelling juxtaposition that many modern investors face: Bitcoin versus real estate. Delving into this inquiry entails a thorough exploration of the divergent attributes, advantages, and drawbacks inherent to these two assets. Our analysis will encompass a comprehensive evaluation of real estate's overarching characteristics alongside a focused assessment of the unique facets exhibited by Bitcoin. To clarify, our discourse exclusively pertains to Bitcoin itself, excluding any discussion of blockchain technology or cryptocurrencies in a broader sense. Control. Let's begin by examining the aspect of control. Real estate investors wield comprehensive authority over their investments and business strategies. They possess the capability to enhance the value of their holdings through physical renovations, rendering them more appealing to the market, whether to potential renters or buyers willing to pay higher prices than before. However, this situation is two-sided. Profitability isn't guaranteed for all business plans. Real estate investors operating with ill-conceived strategies can and do incur financial losses. Conversely, Bitcoin investors lack influence over the valuation of their holdings. The value is exclusively subject to market dynamics, which fluctuate wildly due to unforeseeable and uncontrollable variables. The only elements within the control of Bitcoin investors are the timing of their purchase and sale decisions, as well as the choice of storage location for their Bitcoin holdings. Cash flow. Investors in Bitcoin have the opportunity to generate income by acquiring a mining rig, an advanced computer that can be procured for a substantial sum and utilized to perform intricate calculations for mining Bitcoin. These rigs might yield returns if the Bitcoin price remains elevated, yet numerous variables influence the potential rate of return. Challenges such as securing financing, managing the steep cost of electricity, and orchestrating the operations of a sizable mining venture often surpass the thresholds of feasibility for most investors. A more recent avenue for cryptocurrency investors seeking income is staking. However, it's important to note that staking doesn't apply to Bitcoin, given its utilization of a proof-of-work protocol rather than the proof-of-stake framework. The unstable nature of Bitcoin's valuation introduces an inherent uncertainty. Today's profitable mining rig could rapidly transform into a money-draining apparatus if Bitcoin's price experiences a steep decline. Such a scenario not only leads to a cessation of cash inflows, but also entails a significant depreciation in the mining rig's worth. After all, possessing an electronic device that perpetually incurs losses holds little appeal. In contrast, real estate stands as a consistent generator of cash flow, facilitated by rental payments in the context of rental properties, or interest payments linked to real estate-backed loans. Investors engaged in rental properties can further enhance their cash flow returns through judicious employment of low-cost, long-term, non-callable leverage, commonly known as mortgages. Risk. When contrasting the risk profiles of real estate and Bitcoin, a concise inquiry encapsulates the essence. Which of these two assets can you confidently predict will endure a decade from now? The prudent response to this query unequivocally favors real estate. The necessity for shelter is ingrained in human existence, ensuring the perennial demand for living spaces. In the expansive landscape of cryptocurrencies, Bitcoin emerges as the pioneer and currently commands the highest valuation. However, this hierarchy isn't etched in stone. Potential advancements and shifts within the market could conceivably displace Bitcoin from its prominent position. While all investments inherently carry risk, adopting a broader perspective highlights the indispensability of real estate within the fabric of human society. Conversely, Bitcoin lacks this intrinsic societal significance, making it improbable that it will ever attain a comparable stature. Upside potential. According to its advocates, Bitcoin presents a substantial realm of untapped potential. Given its relative infancy, there exists a prevailing belief that Bitcoin possesses the capacity to ascend to the role of the predominant global currency for commercial transactions, potentially surpassing not only gold but also fiat currencies such as the US dollar. Enthusiasts of Bitcoin assert that its value could effortlessly ascend to astonishing heights of $100,000 or even $1 million per coin. For the sake of discussion, let us momentarily accept their assertions and assume their accuracy, implying that Bitcoin's potential for growth could exceed a factor of 10. On the contrary, real estate investors tend to adopt a significantly more cautious stance when it comes to their forecasts. Rarely, if ever, do real estate investments elicit claims of such extraordinary potential for gains. Any individual positing such a remarkable upside for a real estate investment would likely be met with incredulous laughter within any serious gathering of real estate professionals. The prospect of attaining such astronomical gains simply doesn't align with the conventional beliefs of real estate investors. Leverage, debt, loans. When harnessed adeptly, leverage emerges as a potent instrument in the arsenal of real estate investors. It possesses the capability to amplify returns and furnish vital capital to facilitate the acquisition of investment properties. Naturally, leveraging is accompanied by risk, yet its judicious utilization can notably augment the potential returns on investment. Real estate leveraging typically presents the advantages of affordability, long-term viability, and a significant portion being non-callable. Conversely, leveraging in the realm of Bitcoin paints a contrasting narrative. While options, leveraged funds, and alternative strategies can infuse leverage into Bitcoin-backed investments, the associated costs prove considerably steeper, and the timeframes are substantially shorter compared to real estate mortgages. Leverage applied to a Bitcoin investment carries a relatively high price tag and a markedly heightened degree of risk in comparison to debt incurred for real estate. Moreover, the fundamental nature of Bitcoin doesn't generate cash flow to service the debt autonomously. Conclusion. So, which emerges as the superior investment? Bitcoin or real estate? Drawing upon the rationales expounded earlier, real estate stands as the preeminent asset class aligning with the majority of investors' objectives. Notably, real estate engenders cash flow, boasts an extensive and proven historical trajectory, affords investors considerable command over their investments, and embraces a relatively economical avenue of leveraging through debt. While Bitcoin may lay claim to a potentially more substantial upside, it remains substantially more speculative and untested in contrast to the established realm of real estate. Furthermore, Bitcoin fails to cater to fundamental human needs that inherently persist within society. Conversely, real estate boasts a markedly robust historical foundation and comprehensively caters to all strata of Maslow's hierarchy of needs. It further distinguishes itself by generating cash flow, an attribute that eludes Bitcoin. It is on these grounds that we assert real estate to be a far more adept vehicle for cultivating enduring wealth over the long term. In conclusion, we've delved deep into the captivating debate of real estate versus Bitcoin, unearthing intriguing insights that shed light on the contrasting nature of these two investment avenues. As we've navigated through the realms of potential, risk, and historical significance, it's evident that each asset class holds its allure and challenges. If your curiosity extends to exploring the comparison between real estate and the S&P 500, we've got you covered. Feel free to click on the video displayed on your screen, where we dissect the nuances of these two options, helping you make informed decisions on your journey to financial prosperity. Thanks for watching, and until next time, stay curious and stay informed.